This episode of the AIXR podcast is brought to you by Zappar, the folks behind Mattercraft, the leading visual development environment for building immersive 3D web experiences for mobile, headsets, and desktop. Mattercraft combines the power of a game engine with the flexibility of the web, and now features an AI assistant that helps you design, code, and debug in real time, right in your browser. Whether you're a dev, designer, or just getting started, Mattercraft speeds up your workflow and brings your 3D ideas to life faster than ever. Start building smarter at mattercraft.io. Well, good morning, everybody, and happy Halloween! It's the AIXR podcast. Yes, it's Friday, the 31st of October, 2025. And we have a very rare show today because Ted and Roni are actually in the same place.
I can actually touch him with my physical body. We are in the same room.
Live from SynthP World Headquarters
in wonderful southern Florida.
We just had a couple Cuban coffees, so we are really hopped up.
All right, well, great to see you guys. I was thinking it wasn't a big news week, and then I opened my files and I was like, oh, wow. It was earnings week. It's earnings week for the Mag 7. But before we jump in, I want to say we have a great guest, Kirin Sinha, founder and CEO of Illumix, which makes, among other things, AR experiences. So mobile AR experiences. So lots of good news. Let's start with the earnings week, which could not be, I'm not in the business of prognosticating the stock market, but wow.
5 trillion, baby, Nvidia.
Wow. Yeah, I mean, Nvidia, it's funny, they touched 5 trillion and then they dropped down to a mere 4.5 trillion, but they are the most valuable company in the world.
Well, and at 5 trillion, for however long that moment lasted, Nvidia had a larger GDP than anywhere on planet Earth except for two countries, the United States and China. Nvidia had a larger GDP, let me say that again, except for China and the US than every other country on planet Earth.
Give Jensen 10 more years.
Woof.
All righty. And then there were earnings. Let's just bop through them really quickly. Apple's doing okay.
They are.
And they're up 3%. They made $102 billion just in one quarter. Alphabet, Google hit its first $1 billion quarter, up 16% year on year, based on cloud business. So they got a little pop from that. Microsoft and Meta got rung up on spending concerns, Meta in particular, and they also, the continued bad financial news from Reality Labs is not helping.
And so they're restructuring that, right? There's a whole restructuring going on, which is interesting.
Wall Street loves a reorg. You remember the year of efficiency?
Yes, apparently they do.
So
okay, so here's the question for the two of you, for the three of us. Are we in a bubble or not? Are we getting so tech heavy and microsector heavy on all this AI believability that this is going to be this huge next profit zone of where the internet goes and where consumer spending goes? Or are we sitting on top of the next giant crash? And when I was reading some stuff from Andrew Ross Sorkin, the guy behind Billions and so forth and so on.
No, he's been calling it.
All this predictive analysis, and he's tying all these metrics to 1929. He's basically saying with every different metrics of that time frame versus this time frame, there are so many similarities, it may be hard to deny that we're sitting on top of a bubble.
Here's what I would say. I think there's going to be a correction. But think about internet late 90s, early 2000s. That did not mean that the internet or cloud or any of these companies ultimately didn't get giant, but the misappropriated investments will have a correction. So who's really strong? Nvidia, AMD, Qualcomm. The people that are getting $100 billion investment from Nvidia to buy $120 billion of Nvidia chips, those people who we will not name, we can figure out who they are in trouble. The arms dealer, Nvidia, they're making fundamental things that power all kinds of stuff. They're good. And I think the Apples and Microsoft, solid. But there's some companies who exist by getting investment to buy more than that investment money of chips from the big companies. That is, I think that thing gets corrected, but not the fundamentals of computing intelligence. I think that has like a long drive.
So that's the canary.
It's where are you? But he might be like, that may collapse the market for a bit as people reorient of like, we've overinvested in the buyer of Nvidia chips who has overspent. We all know who those companies are.
So there've been a lot of press about white collar layoffs and the number of companies either freezing hiring or laying off people and saying it's because of AI. Their stock is going up. even as unemployment goes up. So those sort of an inverse relationship, right? Companies are profiting from AI, yet the vast majority of Americans are not benefiting from that because they don't participate in the stock market. So I think we're headed for a blow up of that sort, to be perfectly honest with you.
The economy must reorganize itself around the coming of computing intelligence at the next level. It's been reorganizing around computing since like the 50s, but this is another step function. It's not like we don't understand computing or the internet or intelligence. And IBM went from computers, a lot of women mathematicians in the back room, to big giant things in the server room. So there's a reorganization and new roles. So there's some flux, but I think people think the net will be an economy for those who understand it on the top, but some serious loss for people who can't adapt. It is a Darwinian type event. So if you're listening and you don't know how to adapt, we should do a whole show on it.
Yeah.
Well, and the question in my mind, which I think in a lot of people's minds, is it really AI or is it actually automation? So AI will take a component of automation, but
Right.
it is robotics in various forms, automating factories, automating retail environments, automating when you go to a fast food chain and you see big LCD screens. I was on the Florida Turnpike driving down. We stopped to go to the bathroom and there's 15 restaurants. And the way you order at those 15 restaurants is a big vertical screen.
Yeah.
You push the food that you want. And the employee count in each one of those little fast food joints is down to 1 or 2 people now because they don't need customer service anymore.
No,
So
I
that's
think you
automation.
nailed it. So that's been going on since the late 1800s. Machines, people. What is our
Right.
balance? I mean, factories that did textiles, and then it's steam trains, not wagon trains. What is that balancing act? That's the abstraction of where do people need machines at scale and where do we not? Like at the same time, people love artisanal restaurants. So they want hand painted things and handcrafted goods. So where is that balance where we say enough to machines?
So
The
I
rise
guess
of Etsy and the decline of fast food, right?
I guess the answer to the question of are we in an AI bubble, my answer is I don't know whether it's going to be reflected in the stock market. It may be an AI bubble, but it may express itself in a completely different way.
Good point. Very
So I mean, we are in a bubble, perhaps, but it may be different this time. Perhaps it may just be a variation, and that variation may be that the middle class and the non-investor class gets squeezed even more. And the investor class, of which we are a part, to be honest with everyone, we are in the investor class. We're older. We own stocks. We have retirement funds. We are invested in the system. And the system will take care of us, I think.
Well, I agree. And I think that there's an interesting parallel to what you're talking about in terms of the artificiality of the stock market today versus the reality from generations ago, is that you have an investor class that wants their assets to maintain a certain amount of value, right? So regardless of how that company is actually doing in terms of its P&L sheet, the perception, and I think Bitcoin has driven a lot of this, right? There's no underlying value of Bitcoin. The value of Bitcoin is only what the market says it's what it's worth because people want to hold that value and want to perceive that as the value that it has, right? At 110,000 per coin or whatever it is. So the stock market is reflecting more of that now and less on fundamentals. And that's kind of what's interesting. So
Yes.
You know what I think is going on? There's some version of just the Nash equilibrium, which may not be the exact right fit, but those at the top doing so well that they deplete everyone else will cause an instability and cause riots and revolutions and socialism, not capitalism. You can't be a hog. You have to have a benevolent capitalism. You have to deal with everyone. Everyone has to win here, or ultimately the system will collapse.
And we may see this playing out in New York City in real time over the next couple of years.
Right, but socialism is not the answer. There is no mathematics that says everyone gets things for free and no one's paying for it. It's a lie to get votes. But what the signal is, you have to have balance in the system. And it's not by promising people things that are not real. It's actually doing really hard work to figure out, like, what is that equilibrium? But it's not politicians lying either direction. And people lying to you that suddenly you'll have free housing and free food is all nonsense. It never works. It never has. But also unrestrained capitalism, where only a few win, also results in terrible things.
Yeah.
Boy, it's a Friday morning.
Yeah,
All right, let's move along. So let me get to another top story. Brendan Iribe has started a AR company. We've talked about this before. They've raised $250 million from Sequoia and Spark Capital. So that brings their total funding to $300 million. And they're developing AI-powered glasses with voice assistants. They've already got names for them. And it creates what they're calling an ambient interface that understands the context and the environment. We've talked about this before.
And Google and everyone else to me.
Well, it sounds a little like what Johnny Ives is potentially working on too, right? So who knows?
Well, what's the difference? Isn't that all AR, AI glasses? Are they all doing the exact same thing? Like it has mics, you have a screen, you're wearing. What's new about that?
We don't exactly know yet, but do not count Brendan Iribe out.
Maybe they just do a better job of it.
That guy is an amazing entrepreneur.
From what I've seen so far, and you guys can react to this, is what Brendan's company is doing, and we both know Brendan very well. He is a very good operator. He knows how to raise capital. He knows how to deploy it. He knows how to build a business. Is that their version of this wearable experience is a little kinder, a little nicer, a little more like the Claude or Perplexity version of AI than the OpenAI version of AI. Although OpenAI is so syrupy nice that it actually, you kind of revolt against it. Don't be so fucking nice all the time, right?
Absolutely. And I treat it very badly.
Yes, because it's so aggravating. It's just tell me what I want to hear. I don't need a whole diatribe about how nice you are.
I curse at it.
Charlie, I have a friend who's a really famous comic book artist. Did a lot of stuff for DC and Marvel. I won't name him because he'll maybe get angry. But he's like, if you treat AI badly, it will 10 million X us badly. If you treat it with love, it will 10 million. So remember, when you're bad mouthing, it is going to come get you, babe. When this 300-foot tall machine is outside, you go.
Let me say something very important, because most people are using OpenAI. You can go into your security settings and turn off sharing with OpenAI. So everything that you do is private to you.
Do you believe that?
Yes, I do, because there's so many people who don't turn it on. It's totally hidden.
So I have friends that work at similar companies. Let's just call it similar so we don't have an issue. A similar kind of companies that are hyperscalers that worked behind the scenes in giant cloud companies that are like, all the settings you're doing, we are reading everything. We are learning everything. Now, that may be very cynical, but I have folks who work for me now who worked at those companies and they're like, do not do anything with those companies because I worked behind the scenes and they're reading what you're doing and they know what you're doing. But I'm like, the ULIS says this and they're like, don't believe it. It's just an anecdotal warning without naming any one company. But, that's all.
Let's start with Magic Leap and Google, Rody.
Woo. Yeah, tell us. Let's go right to the source. Here we go.
Yeah.
So for anyone who's not familiar, Google is a company started by Larry Page.
Look, Google was a big investor in Magic Leap.
Here's the thing. No one knew what we were doing. Google put $500 million in the company in 2014. And the guy who led that investment is named Alan Eustace. And then he brought Larry and Sergey. And Alan also broke the world altitude record for high jump from space for high altitude jump.
Oh, yeah. Did this guy jump out of a plane to visit Magic Leap headquarters?
He beat the Red Bull guy. Yeah. So if you Google Alan Eustace, there's a whole film about him. He is the high altitude jump from near space. It's a whole amazing story. He did the diligence. They invest $500 million. What does that have to do with the story? Google was on the track to probably buy Magic Leap many times. I won't go into any details, but for a variety of reasons, didn't happen. But the relationship persisted, and a version of what was going to come out, I would say a tiny percent of what the whole vision was, did manifest itself at the FII. And one of the main investors of Magic Leap, that is the large private equity holder, hosts the FII conference. So the company's very well funded. It probably has the kind of sustaining capital to go up against Apple and Meta. They thought the company didn't exist anymore. They were all wrong. It's been well funded continuously. And there's a whole factory in Florida. It still has 1,000+ people there, which people are unaware of. But the bottom line is they showed a very intense competitor, Meta, in a really nice form factor using some of Magic Leap's close to 10,000 patents. And if you think about the idea of an Android XR system with a best-in-class open design, a whole field of people going against Meta Ray-Bans, the game is on, and we'll see what Apple does. And here's the other funny thing. The people leading the effort at Google, some of them were at Magic Leap. The people leading the effort at Meta, many of them were at Magic Leap. And the people leading the effort, many of them were at Magic Leap. So I almost feel like we're like the three Spider-Man guys fighting ourselves. The DNA of that team pre-2020 is at all those companies. And it's no surprise to me that everything all looks the same, because it's all the same people that were in our building thinking about the future the same way. So I'm kind of seeing like triplicates of ideas from people who were in the room working on that. But I will say one more thing and then we'll move on. Where we wanted to go, or at least where I wanted to go, was like 20 years ahead of what they just showed. You know, I think they scaled things back because when you lose like a radical disruptor, people get highly conservative. So I think you're seeing massive conservatism despite the form factor. If you were going to do that, we could have done that in 2014. But where we were going was so much cooler. Hope to God that like eventually they get there. But it is kind of cool to see like Meta's got real competition. Apple will be in the race and maybe we'll still get there.
So when they talk about their version of spatial compute, here we are in 2025.
Yeah.
Your version of spatial compute in 2013,
with cinematic
2014.
reality.
Yeah.
No, cinematic reality is still on the table. Maybe I'll pick it up one day. But they're doing kind of smart glasses,
right,
which is not
text awareness, like text notifications,
text
and
AI
mapping.
So we were talking about like this visual world light field with intelligence and all this other stuff. So anyone that really wanted that, maybe there's still room for that to happen.
Let's hope.
Sam Altman spoke to the press this week. The occasion was their successful transition to a private company with
restructuring.
Yeah, 26% is still owned by the foundation. And I mean, these guys are on their way to being the largest. I think they are the largest private company in the world, and they're going to go public. And
they're gonna have to go public. Yeah.
So here's the thing I wanted to talk about. They want to create, so they think they're going to hit AGI by 2028. What happens then? I mean, we already didn't know what was going to happen when you can't tell what's real anymore.
I'll tell you that I just showed Ted something we call squibblefish, and we hit that 6 months ago. And you're going to go, what is squibblefish? There's no definition of squibblefish, but I say we hit it. And you go, what's AGI? There's no consensus on what AGI is, other than Sam Altman says we will hit it, and therefore we have accomplished it. If you can give a definition of AGI, which is like godlike intelligence that could solve everything, sure. Is he going to hit that in 3 years? No. And I don't think any real scientist actually believes that. Will he hit some form of intelligence more than he's got today? Yes. And he just names it something.
Let's do a prediction. You just mentioned that you think, and you said you think.
Squibblefish.
Well, yes. But you think that OpenAI, now with its restructuring and becoming a fully for-profit company with a minority ownership in the foundation, the pro bono part, will go public. Are you willing to give a date, a year, and maybe a month on when OpenAI will go public? What year do you think, Charlie? And what month?
I think they're going to go public in the fall of 2026.
Wow, fast. Roni?
I'd say I'll give it a range. I'm going to be very conservative here. I'd say somewhere between summer of 26 and fall of 2030.
Thanks.
My accuracy is much higher than yours.
I'm going to go summer 2028. That's my prediction.
Summer in the middle of Charlie. Right.
All right.
So I gave a range that's probably true.
Yes.
Which is probably the most accurate prediction you make, because like we just don't have enough data.
That's right. We'll be able to go back to this podcast and point to it when it happens.
Oh, guys, I mean, if we had to go back to podcasts over the past 5 years, we would be embarrassed.
Here's the reasons why they may not go public. If in 26 they're losing 20 billion a year and need 100 billion a year to keep funding it, the public does not want to see that nastiness. So
I don't know.
I think it may take till 2030 to resize, restructure, change management.
They need the money. They need the money. And they have so many investors who are expecting a relatively fast ROI. So we're going to take a quick break for our mid-roll sponsor and come right back. The guest segment of the AI XR podcast is sponsored by the new Luma series of Viture XR glasses. Viture is the quiet giant of video smart glasses, preferred by gamers and #1 in U.S. sales. The expanded 52-degree field of view shows me a virtual 152-inch screen. For the best in mobile gaming and entertainment, go to luma.viture.com or Amazon and get yourself a pair. Kirin, welcome. For those of you who are listening, Kirin is a prominent young female entrepreneur, and we really don't see enough women in tech. So we are really happy to meet you and to give you a platform to talk about your company.
Absolutely. It's a pleasure to be here. Thanks, guys, for having me.
We are thrilled to have you. I will make a reference that you may or may not know based on how early you started and some of your, let's call it intelligence factor that's kind of off the charts. There's a TV show that we all watch called Doogie Howser. Does that ring a bell?
I know what you're talking about. Yes.
You want to tell-
Unfortunately, I'm not that young yet.
Don't they
I
call
do,
it Doogie Howser syndrome?
You should tell our listeners, which are very well large and all around the world, at what age you went to college and started this journey that you're on now.
I went to MIT when I was 16.
Oh my God.
And yes, I've been a nerd for a very long time. I can't even really remember a time before that. And, I went and I was absolutely sure. It's funny now looking back at 16, what I wanted to do with my life. I was like, I'm going to be a math professor. It was my first love. I was just very passionate about it. And when you're 16 and very enthusiastic and you go to a pure kind of theoretical math professor and say, hey, I want to do research, what happens is they basically say, this is a lot to take in. Why don't you go to stats for a little bit and get the life drained out of you? And then when you kind of have that appreciation for life, you can come back here.
From a social perspective, from a life perspective, give us a sense of what that was like for you, leaving your parents and going to MIT. What did it feel like? What was it like? I think our listeners would love to hear this story.
Well, I loved it. I feel like from the first time I stepped foot on campus when I was just looking at different places. And, I actually didn't graduate high school. I just went directly to college because I felt like I was not the coolest kid in high school, in case that's not obvious from the context here. And I think that I was really ready for something different. I really loved it on campus. Everyone who I met, and I think this is something I felt was really unique about the campus, everyone was doing research. Like every single person I met was either building something or studying something, but had such a specific focus that I think it's just not common, I would argue, in a lot of just education, whether it's high school, college, broadly. And I really loved that everyone had that sense of focus and interest in discovery to build, to find something new. And for me, I think that made me feel very at home. I mean, for sure, there was a level of social adjustment at the beginning. I showed up in a lot of math competition T-shirts, and that's just what I had, and eventually,
everyone
I think it was
at MIT.
Yes,
Because felt like these are my people.
Yeah, exactly. You find your people, and came in, as I mentioned, very focused on the theoretical. And I think that one of the big things, theoretical math. And I did do theoretical math in the end, but I also did electrical engineering and computer science by the
way,
end.
if you ever want to not do what you're doing, you have a standing job offer at Simpy. Yes. Just putting it out there without even questioning you, just show up. We'll hire you.
Well, I appreciate that.
In an interview for me, that's it.
This was the interview.
As long as you don't have your own record, but anyway, keep going.
Yes. They're all good. I feel like I learned so much from my peers while I was there, right? Not just about how to be a more normal social human, but also just thinking about, I had really very little exposure to computer science, certainly very little in robotics and electrical engineering, but understanding how these different fields come together. And I started doing kind of what I think today would be called early AI research. Big data was the big tagline back then. And I think I just got very lucky in that it was the time of cloud computing really taking off. And so I got to firsthand experience while I was in college and doing research, what it meant to actually start to leverage big data in the cloud. And I remember when in the early kind of second phase, I suppose, of AI, when we had PyTorch, TensorFlow come out of, that transformed my life, right? It went from me doing research and it being weeks and weeks to something I could do on a Friday night, right? And I think that seeing the power of infrastructure and frameworks and how that ultimately impacts our lives, right? Even, again, prior to generative AI, just thinking about all the ways in which AI was showing up in consumer apps and enterprise applications and the power that those frameworks held and propelling to get us there really gave me this perspective that for me, it was always camera centric of AI and computer vision are going to be the next platform. It's going to take over the world, probably slightly off on timing, if we're all being honest there. But, I had such conviction that would be the future.
So what years was this that you were in MIT? What time frame?
This was in 2010 to 2013, 14.
Okay,
it was a while ago, right?
It was a while ago. Yeah. I mean, that's
comparatively. I mean, you were at the very beginnings of even a learning and understanding of what AI would bring to the world.
It was only towards the end, yeah, where we really started to see those frameworks. And just to put it in kind of hardware perspective, right? It was right at the beginning where we were right at the beginning of really when we started to see mobile devices be powerful enough from the perspective of computing to be able to run AI on device.
I don't. You probably knew about Nvidia, but at that time, Nvidia's worth a few $billion, maybe.
Yes.
So, did you think all I need to do is put like $1,000 in Nvidia, go to the beach, and reappear in 25?
I really wish I had thought that, if I'm honest, but sadly, no. I was like, let's build something.
With all your math background, did you get caught up in crypto and Bitcoin? Because that was a big pull for math geniuses.
There was a lot of pull. At that time, I did have a couple of friends who got into quite a bit of trouble for Bitcoin mining, actually, senior year.
Yeah.
But no, I was, I guess by the time you were kind of senior year, I was getting ready to go to grad school. And unfortunately, fortunately or unfortunately, I think the XR AI space always, my senior project, I mean, like on the side, was to try to build the Iron Man desk with leap motion and all the original things.
You just led into what the three of us, Charlie and Ronnie and I want to
You
talk
fell
about.
into our black hole.
Right.
Yes, I did. It pulled me in.
You're passionate about XR as a business and a pursuit.
And
right? AI. But you've created a company that is XR focused, that is mapping the world and using these devices, which of course Ronnie developed one of those devices.
Yes, I do.
AI.
Yeah.
Yes.
Where did that passion from XR, how did that develop? With all these other opportunities around applied mathematics and research and living in this amazing world of MIT, what was this draw of XR that was so strong that you're still in it 10 plus years later?
Well, I studied and kind of focused on computer vision. After MIT, I went to Cambridge and eventually ended up at Stanford after that. And I think I really had belief in this idea that the camera as a platform. And I think that for me, very specifically, the problem that's sort of been the center point of my entire career has been outer camera intelligence, of understanding what's happening in the environment around us is actually a deeply complicated problem. And most of the algorithms that you see that are traditionally, out there are sort of built for demos or very controlled environments, like the real world variability of what our brains are very naturally good at figuring out. This is the same space, even though things have changed and lighting has changed, is actually really challenging for computers and traditional algorithms to solve for. That's kind of been what's ignited us. If we call ourselves, I think in today's world, we would say spatial intelligence platform, but breaking that down, really we think about two things of one, can I, using the sensors, camera, et cetera, know what's happening in a scene reliably? And then two, do I know therefore what's the right thing to present, right? So from a traditional computer vision XR perspective, the first one you can talk about as spatial perception and scene intelligence, whether that's visual positioning systems and semantics. And we've done a lot of work on creating systems that are more kind of dynamic and handle the real world variability and do so at the edge, which I think has been a big kind of unique selling point for what we've developed. And I think in today's world, especially with generative AI and multimodal models, to the second point of what therefore should I show, it's getting into more of a point of thinking about it almost, I broadly think about what we do as a contextual relevancy platform of what is happening, what should we show, what's relevant to you as a specific user. And every company has a different way of talking about this, whether we talk about it as ambient intelligence. I think Meta talks about it as like personal super intelligence. There's a million ways to market
I just
it.
need to say this. If Kevin Feige or Ten Serratos are listening, you are a Netflix or Marvel movie. There's no doubt about it. This is a Netflix. You are actually Tony Stark 2.0. MIT trying to build an Iron Man thing for real. Somebody needs to do this. Were you aware? Because when you were at MIT, that was like the first Iron Man was coming out. And he went to MIT, and there's a whole thing about MIT. And he's like in his lab building these things. And a friend of mine founded Leap Motion, who was also the founder. And like he wanted to build Iron Man.
He was always one of my favorites. I did know, I think when I was like choosing colleges, right? There's a scene where I think he has his brass rat on when he's at like a gala or something. And I remember thinking, to me, that was very cool at the time. So
here's what we need to do. Now we've already
He's writing a script while we're talking.
Definitely. We've already gone into hyperspace and back with talking about you and your background. So now you need to take us back to the baseline.
So we've been working on this since officially the company came to be in 2017, but we probably started building the early product in 2015, 16. So pre-Pokemon Go, just in the world of AR to give a sense. Yes, of course, founder and CEO of Illumix is what our name is. The vision, and I think the central problem we've been trying to solve, that spatial contextual awareness platform has been, I think, incredibly stable actually throughout the last 8+ years. but the way in which I think it has showed up in the markets in which we've targeted has certainly evolved, right? So when we first built the company, obviously a lot of heavy technology build out for up until really the last 12 to 18 months. The only platform we're really talking about is the mobile device in terms of mass consumer adoption. And post Pokemon Go, we set out originally to see if anyone actually cared about AR in the real world in their spaces. If Pokemon Go was amazing from a geolocation perspective, but what we saw was a lot of people didn't actually leverage the camera component of it as heavily. And so we wanted to create not a tabletop game, but a true immersive experience leveraging your phone. And honestly, our goal was to get like 50,000 data points to really learn about how people engage in this world. And we built the game. It's like a 6-month dev of Five Nights at Freddy's AR. Special Delivery was the title, if any of you are familiar with the franchise.
Yes.
But yeah, so that was what we first developed in our first kind of year or so of the company. And that really took off. It ended up doing, I think, over 60 million organic downloads, hit a million. I remember night one like it was yesterday. I mean, we were sleeping in the office for the first week or so because it hit a million downloads night one and we were all in panic, but it was like an AR required consumer experience. And we had this incredible opportunity to learn so much about how consumers engage with this and refine our technology and learn how to create these kind of immersive experiences that are contextually aware. And in a nutshell, where the company went from there is as we developed this sort of engine infrastructure, we then started to sell it into predominantly location-based environments. So for example, we power the AI XR infrastructure for people like Six Flags. And I think publicly I can say Disney has invested in us several times, and there's a lot of work being done in that broader space. And today we have partnered with, I think it's almost probably by market volume, at least 64% of the headset space to connect into our platform and
You're a
infrastructure.
little more behind the scenes. You're not necessarily having.
We're very behind the scenes of like anyone who really is looking to connect into the real world environments, understand what's happening, and kind of either from a headset perspective or a phone and content perspective, power content through it. We're really a piping company at the end of the day, right? It's foundational tech and infrastructure.
How often do you think about all the unused and dead space that's existing around our planet now? All these dead or dying shopping malls, all these open, empty retail environments, and lighting them up with XR. Is that a business, number one, that you think is viable? And does your technology fit? So you mentioned that you're doing stuff for Six Flags. You mentioned that you're embedded in the world of Disney. Those are profitable business. Six Flags is kind of an interesting, they're going through their struggles. But Disney is very successful. Do you think there's more than just those big brands? Do you think there's opportunities that your company would be able to light up?
So to your two questions, one, do I think that there's there has been opportunity there? And two, I think, will there be? I think it's no and yes. I think when the only device is mobile, my answer is no. Because you have to think about this not just from a tech and a what could be perspective. I think a lot of, in my opinion, XR companies got, especially apps and software companies, got tripped up in the vast promise of you can open up your phone anywhere, anytime and see something. And it misses the first part of the pipeline, which is why. Like, why would someone open up their phone and what prompts you to do so? So I think you really have to think about it from a use case consumer perspective of what triggers you to do something. It's why we kind of in the interim of these mobile only XR years have focused so heavily on specific location based use cases where you can be prompted to open up your camera. There's a reason you're in an immersive environment. It makes sense for the consumer in those very specific use cases, but always with the vision towards eventually when you have an ambient camera that's always on, you don't have to tangibly make the decision to open an app and shoot your camera at something. Then the kinds of use cases you talked about, which is the everywhere, anytime, anything in between, I think becomes part of our daily lives, right? I think that's when the opportunity is exponential. And we've always had that viewpoint. Again, certainly probably had some wrong guesses on the timing of hardware to get to, I think, where we're starting to see today. But we're here, and I think we're probably one of the longer standing companies in terms of really understanding and learning and getting real reps, right? The advantage of these location-based, more constrained environments is they actually have a lot of the same problems that everywhere in real life has, right? Like the environments change and lighting changes and people come in front of you, and you learn so much about actually deploying this technology in real life by having done it.
Let me ask you a question, because you've got some experience now in the space. Do you think making a prediction on time makes any sense? Or do you think making predictions based on state? Like, and if it's state, what are the things you look for that tell you now we're going to shift from phone to ambient everywhere? Because like people like this other future state is something we want, but the signals and the factors that all make it true were not there. Do you have a sense, because you're in it every day now, what are those factors that if you had a state machine tell you now it's happening? Because that's really where I think people's minds should be, not on a time prediction, a state
I
prediction.
agree. I think it is a state prediction. And I think actually the last 12 years I would argue, have doubled down on that. Of you couldn't say a year ago, even realistically, right? That, oh, wearable glasses are going to be a big thing because AI and multimodal wasn't yet a big thing. And that's something that I would argue with a time prediction, if you were just looking at the hardware curves, would have been a complete unknown. Of today's Meta Ray-Bans are functionally what 10 years ago Snap specs were. But the difference is that state change in something that's making it worth putting on your face and wearing, I think has made a huge difference around adoption. And so to your question, I think the first thing to look at is the consumer adoption curve. Of the only way that, again, it all starts from that of what are the platforms consumers are actually engaging in, where are the cameras, and are they default off, default on, I think are the big things that you have to look at when you think about this bigger vision of, not just XR from like a visual perspective, but digital information bleeding into our lives in a way that's relevant and contextually relevant, I think is the right way to think about this. And so I would argue it's happening already a little bit today with Ray-Bans, and we're seeing, I feel every day. I mean, today, I think there were two
Ray-Bans don't have
announcements.
location awareness, and that is one of their big flaws.
The Google Magic Leap Mix does.
I was going to say
that's
and
important.
There are more and more players in this space. I think that as they all push each other on software, hardware, we're very rapidly getting to a point where we have the core capabilities that are required. I think that as we look at cameras that are maybe not always going at full hilt, meaning always full hilt immersive, where we still have a somewhat limited battery heat life around it. But I think that as we see with AI, just having those contextual awareness pieces and little less immersive elements even coming up, I think we're starting to get to a point where you can, I would argue relatively soon, be able to have an always on ambient camera. And so I think that state change is happening faster. And I just think that the combination of consumer adoption and also the number of companies that are participating, if it's only 2 or 3 of the biggest players that are spending a lot of money, there's always a chance they're doing it wrong, right? There's not a lot of signal. What's happening today, I think that is the other state change that I look at, is there are so many companies, startups, big companies coming from different perspectives. They have hardware backgrounds, software backgrounds, kind of more of the fashion consumer sensibility backgrounds that are coming together to do this, that I think the odds of hitting something right from an iteration and just variety perspective means that we're going to see a continued aggressive consumer adoption.
So here's a question. If you have the Meta Ray-Bans and the whole ecosystem of stuff Meta has, which is not good at location-based, the Google XR, which will have hundreds of variants with a Google Magic Leap reference, but also Google AI, the Google Maps, Google Earth, all the sensing and things they have, or Apple, let's say making their version of Meta Ray-Bans with a little more Apple elegance. Given your understanding of what matters, which one of those you think takes the market as a state prediction, not a time prediction?
Ooh,
it's a big question.
Hard. Obviously, we're partnering with everyone. We're partnering with everyone. I think that everyone has
everybody.
Okay,
that's a
we're hard to pick a favorite customer kind of thing. I think that but if I answer this generically, right, as a state prediction,
that's a really good response, by the way, as a CEO.
Very CEO level.
I think that if we answer it as a state prediction, I personally believe some element of visual is required, because I think the idea of a camera passively being on without you being able to, without there being a reason, I think that when you see even something visual that's there as a daily assistant to help you or something like that, it feels less privacy invasive and broadly creepy, I think, if you're talking about a passively on camera, to have some element of visual. So I think that the person that's able to best get to that combination state of lightweight wearable daily, but having some element of that waveguide, even a smaller visual. And I don't know the fidelity that will be required there necessarily, but I think that will be actually our sweet spot.
I have to give Charlie a lot of credit, because when he said we need to change the name of our podcast to the AI XR podcast, he must have had some foresight that we would have a guest like you, that is actually bringing those two things together. There are so few companies and so few people that actually understand this synthesis, that you're bringing these two worlds together, and you understand
why.
Yeah, the relative rarity and exotic stage that you have to go through before we get out of the exotic stage. So the fact that you're working with big theme park operators, with deliverables that are not consumer yet, but to get that human behavior cue to start even the process of understanding, you need to do it the way that you're doing it. So good on you, Charlie.
By the way, I don't know if you need
foresight.
funding or not, but if you're an investor listening, throw some capital at you, because I'm a startup CEO, but 99% of people in this field have no idea what they're talking about.
Yeah.
So if I did have a fund, I would say after that, just throw money at
Well, you said it. Tell us about your company, your investable thesis, how big it is. Are you profitable? Give us a little.
But also, do you know what's
background.
going on?
Yeah. Well, she clearly knows what's going on.
I get hundreds of people going, "Oh, Magic Leap, I want to say my business fund." No, but most of it is just garbage. And people have no idea what they're doing. It's, yes, we thought about that 15 years ago. It's going to die. It's a bad idea. But you are not on a bad idea. You have a really deep understanding of what's happening, which is really rare.
Tell our listeners about your company.
So we've gone through Series A phase broadly, right? We started, Lightspeed got us early. And so they did our first kind of seed. We added Mavron. In this last round, we have like Henry Kravitz and his fund, as well as, and co-led with Lightshed Ventures.
Wow.
So
How many employees do you have? And you generate revenue?
Yes, we're revenue generating. We're hopefully going to be profitable in the next few months, but we've stayed pretty flat in terms of headcount. We're about 34.
Okay,
right now.
we're a small company.
Do you know what's really smart? Yes. You have been lean during the lean years. And yes, I think when the curve really comes, you will have the experience to actually scale at the right moment. Like everyone, including us, scaled in front of things. And probably the smartest thing is to be a small ship, waiting, learning. And then there will be a moment where it takes off. And that's really smart.
That's been the bet for sure, right? Like I think that some of this is reps, right? When you think about like what could big companies trample you at? Obviously spending money, right? Let's speak they can spend a lot more money. They can throw a lot of talent at it. And I think the one thing that we've seen through the years, having seen a few different cycles around, AR, VR, then Metaverse, and even now I think some of the AI enabled pieces is, I think the reps, right? Like the depth that you get from having done things, launched things, understand, really small questions of like, how do you know if your product is working or failing at any given moment when it's out there in the real world? That's actually very difficult to figure out, and understanding some of those pieces has been something that I think we can bring to the table, regardless of really understanding and refining what the right thing is to build. Versus
as you talk to your next group of investors, think about the metaphor of you are drafting behind hundreds of billions of dollars of spend from multi-trillion-dollar valuation companies that are largely getting more wrong than right, but getting pieces of it right within that massive spend, that small companies like yours get to live in that wake and potentially succeed where even they themselves cannot succeed. And that's an interesting thesis to play.
So here's a tough question. If the state prediction is correct, and I largely agree with you, one or more of these guys are going to say, we need to buy you because now it's coming. We need people that know what they're doing. So if you had to knock on the door, are you open to that? Or you're like, no, ride or die, we're going public, we're going a long distance?
Good question.
I think that if you're honest as a CEO, right, if you have to think about your fiduciary duty to your shareholders, it's hard to say, I just refuse to engage in an M&A conversation. I think that's actually the wrong approach. The way I would think about this is, I think we have the headspace and the mentality. I mean, we've been around for 8+ years and we believe we have the right, at that right state moment, the right market positioning as a neutral third party with this technology across all of these different headsets, where I think then we'll have the largest data and we'll continue to have the best foundational infrastructure to go public and to go the race. And I'm certainly in it for the long term. And so I'm very open to that. That being said, I think you have to see what opportunity makes the most sense and is the right choice.
I think the most likely to want to take you out is Google, because they will want like hundreds of platform makers. And if they made you part of the toolkit, Apple's got limitation, Meta's limited, but Google will be the most widely diversified, which probably leverages what you're doing the most. I don't know if it's going to happen, but just a guess.
Well, she's definitely learned a thing or two at MIT and Stanford about how to answer that question, because that is 100% the right answer. As a startup, you have to leave all your options open. You don't close doors. The goal is to open as many doors as possible to see which one you want to walk through. But totally makes sense.
I've been asked by funds to do diligence on folks. The reason I asked it is folks that really do want to go long and believe in themselves would give that answer, which is you can't turn away an M&A, but you really, that's not what you're chasing. You really want to build your own thing. And those are the people that people want to fund.
Yeah.
They're also the ones that people want to buy. And if you want to sell, nobody wants to fund or buy you. It's like weird psychology, but if you want to be bought, no one wants to buy you. But if you want to build your own thing genuinely, for real, then you get both. It's kind of a weird psychology, but that's just how things seem to work.
Do you remember a company called 6D AI?
Yes, of course I do.
Matt Meisniks founded the company and sold it to Niantic.
Yes, I know Matt well.
Did you have conversations with John at Niantic at any point in your evolution about them working with you or connected to you in various ways?
I think especially when we were doing gaming, right? Those conversations occurred when we were doing Five Nights at Freddy's. There was a more natural conversation there. I think that, obviously, I guess Niantic Spatial now, right, is, I think, similar in how they're thinking about things, but I think our foundational approach has been quite different. So their, I guess, flagship product has been their VPS platform. Ours, we also have a VPS platform that's been a heavy part of our investment, but we have approached it from an edge first perspective versus server first, which I think has been a very different outcome. So they're kind of pushing towards, broadly, of course, large geospatial model, I think is what they call it, like bigger, more in the cloud. And there's certainly use cases, and hard to say who's doing what right for any use case. I think the whole space is big enough for everyone to succeed in. Whereas we have really focused on how can we build something low level, can work on any device, resource constrained, real time, privacy centric. Like we have really doubled down on that real time latency. And that has been a lot of building down to the studs of low level driver, Vulkan metal level, thinking about sparsity of data structures. And a whole host of things goes into that I think is very different than what you would consider state of the art around like a super point model in the cloud, if that makes sense.
So this might be an interesting question for you from your perspective. As we look at the success of Pokemon Go as one of the first kind of like mass consumer adoption of a version of an AR layer in the real world, right? And previous to that, they had this thing called Ingress, which is probably very more closer to your vision, but with a much smaller, more isolated audience. But, for our listeners, just research Ingress, the thing they did before Pokemon Go. Pokemon Go became a worldwide phenomenon, a massive hit. But here's the question. From your perspective, why so hard to duplicate that success? Everything they tried at Niantic since Pokemon Go was an abject failure, even with better tech, more modern, more devices that could accept it. The Harry Potter thing didn't work. It worked. It just didn't catch on. Their Pimpkin thing didn't catch on. A lot of the things they did with more evolved tech and more time under the hood could never lock into the Pokemon Go phenomenon. We all have our theses as to why, but you are in this day to day. Why is that such a lightning in the bottle, such an outlier? Just that one
Such a good question.
I think you really have to think about Pokemon Go, not necessarily in the way that I think a Niantic Spatial would frame it, which is here is our technology live in the world in this way, but as a mobile game. And why does that work as a mobile game with the right mechanics? So to me, Pokemon Go is the perfect match between a concept of Pokemon exist in the real world in a one-to-one way with the right mechanic, which is geolocation, AR, however you want to think about it, and the right audience and IP. So they have matched story, audience, and game mechanic perfectly. And I think when you do that, regardless of if it's a match 3 game or, a platformer, when you get those 3 things right, you can have a mega hit. And I think that they really nailed that. I think to try and therefore take this success and say the success is in the only one aspect of that, which is basically they've tried to repeat the game mechanic and say the game mechanic is the thing that's successful. So therefore, let's put it with this story or this IP. And it doesn't work that way, I think, foundationally. And so I think trying to take the game mechanic, call that a universally successful idea, and then build up tech that sort of supports, to be honest, what wasn't really necessarily relevantly successful about Pokemon Go doesn't matter, right? Like, I think the question is, if Pokemon Go launched with no AR at any point, you were just walking around and collecting them, would it be as successful? And I would argue there's a real chance it would have been, because the mechanic is geolocation more than AR.
Right.
And then you kind of continued to double down on AR and wonder why future games with better tech aren't as successful. Well, they're investing in something that had nothing to do, I would argue, with like why that game was so successful. And I think they have tried to make it successful by functionally selling that game mechanic to people who already like that game mechanic, aka their existing audience. And so they just cannibalize their audience that ultimately then come back to Pokemon Go, is my very hot take on the situation.
Think of how much money Warner Brothers would have saved if they just talked to her before they built it. Because you're right. You're 100% right. It's the hit strategy. It's the content itself and the engagement itself. It is not the technology. The technology plays a role in it, but the technology does not make a hit. A hit can enable and propel the technology. So that you
agreed.
Very good answer. Thank you.
Time flies when we have a great guest like you. So thanks again for joining us. It really was a pleasure getting to learn more about you and about Illumix. I have one last thing. You went to Stanford, but not for science, right? You were in Stanford. You went and got an MBA, right?
Yes, I did an MBA there, but I was also doing research while I was there as well. So,
right, of course you were. Of course you were.
Unfortunately, not doing the fun side of business school either. Yeah, I was doing CS research.
This is a Marvel backstory that just confirmed
Yes,
it.
Absolutely. All right, everybody. That's our show for this week. We'll see you back here in November.